Welcome to the Investors Trading Academy event of the week. Each week, our staff of analysts and educators tries to provide you with a better understanding of a major market event scheduled during the next week. In this video, we're going to look at the upcoming Federal Reserve meeting, which will take place over 2 days on January 27th and 28th, just a few days after the much talked about European Central Bank meeting, which will take place on January 22nd. The Federal Reserve moved almost imperceptibly at its last meeting on December the 17th toward eventually raising interest rates in a statement that Fed watchers called surprisingly dovish. As expected, the rate-setting Federal Open Market Committee replaced its pledge to keep its key lending rate near zero for a considerable time, saying instead that the committee judges it can be patient about tightening monetary policy. Minutes of the Federal Open Market Committee's December 16th-17th meeting were released this past week and showed the committee agreed the US economy was likely to continue improving, leading to more job gains. The minutes also repeated Chair Janet Yellen's predictions that inflation would move up toward the Fed's target as the labor market strengthens. Another report released this week indicated that the Fed may actually be slower to raise rates than it had previously planned. The federal funds rate has been at 0 to 0.25% since the end of 2008. Members of the FOMC released new predictions of how high they think the funds rate will rise. The median of their new forecast is 1.125% for the end of 2015, which is lower than their 1.375% median estimate in September. In other words, the rate setters are postponing, again, when they expect the economy to be strong enough and inflation high enough to justify higher rates. The median voter on the FOMC now doesn't expect inflation to reach the Fed's target until 2016. Traders are hoping that they will get some direction from the January meeting as the new year begins and the countdown. Yellen has indicated that the rate increases could start as early as April.